Okay, let me know if you guys can hear me, and in about 1 second, if you guys can see the chart. Everything good? Oh, I already shared it. Cool. Perfect. So I won't have the opportunity to hop on live tomorrow, so I wanted to get on today. And I do think we can have, even though it's a short week, this upcoming week, some good opportunities for some trade and a clear draw on liquidity at the moment. So I want to discuss that now. If you have to leave early or you want to review this will be recorded, and I will post it under the, if you go to the important tab at the top of our Discord and hit the drop down, there's a weekly outlook. I'll ping in there too, obviously, so just be aware of that if you guys want to review it after, or at the end of the week if you want to see how I did and what the market actually did this week. But essentially, we'll see how we open on Sunday, but I prefer longs this week. We have a lot of built up buy side liquidity above current market price on both markets, and we're going to walk through that here, and I'm going to discuss potential scenarios. So we're going to walk through these three templates, these tabs at the top of my screen that you can see, and they will be dual screen on each one like you see here. Weekly, Nasdaq will be on the left, ES will be on the right for every template, okay? Daily, and then 4 hour. And I can get a clear enough picture of what I want to see in terms of where price is going as the draw on liquidity from these time frames. And I've mentioned this before, not only in weekly outlook videos, but pre-market videos. Starting from the weekly down to the 1 hour, that's what I rely on for my top-down analysis, the time frames that I utilize for my bias. And if I can really get a clear picture on those higher time frames, I really try to not do too much going lower. The only reason I'll go lower at that point really is to look for an entry on a 1 minute chart during the intraday session when I'm looking to execute on my positions, okay? So today, I'm only going to go down to the 4 hour chart. That is by no means, again, negating the fact that the 1 hour chart or the 15 minute is not important. But also a note on that, I looked at the 1 hour before I got on, and there's nothing I really want to mention that's super clear to me. So I just kind of want to start discussing here in the weekly and tell you guys my thoughts. So Nasdaq, and I guess before we do this, economic calendar, bank holiday tomorrow, or Monday, I guess. So I will not be trading. Tuesday, red folder at 10 a.m. Wednesday, red folder at 10 a.m. Thursday, red folder at 8:15, 8:30. Orange folder 9:45, and red folder again at 10 a.m. on Thursday. Friday 8:30, and then non-farm payroll, which is actually that 8:30 Friday news event. So I think with all those red folder events every day this week, even with a short week in the bank holiday, I think we can get some great opportunities this week. Of course, we'll see and remain fluid with price and rely on the signatures that we utilize day in and day out to at least hunt opportunities and hunt setups, okay? But we have a lot of red folder news this week, which can be used to our benefit, okay? So right off the rip here, you can see on NASDAQ, we have this weekly SIBI that is residing right above this weekly now swing high from 2 weeks ago, Monday's August 19th, or not Monday's, but just August 19th weekly candle here. The swing high that you see where my cursor is, okay? So that, of course, is a draw, but if I think price is going to go up to this swing high, I want to see it go to and through there, right, to stop out, even if it's going to reverse, right, regardless of what it's going to do after that. I want to see price go to and through there. So looking at the weekly chart, what is it going to want to reach for above that swing high? That SIBI right above there. So I'm looking at that as, even on this dump down, okay, they left this to target at a later point, or in other words, the terminology I utilize, and you guys hear me talk about it a lot, is engineered buy-side liquidity, right? So I'm looking at this as a high probability liquidity pool, 20,000, 25.25. Okay, but really I want to see price drop to the low of the weekly SIBI at 20,084.75. Okay. Looking at S&P in terms of just structure, and just real quick on NAS. I mean, you guys see it, but beautiful delivery, guys, out of this. And if we put the middle line on here, it looks like we didn't reach it, right? And that's still a signature of strength, but there's a volume imbalance at the high here. So you guys have heard me say before, if there's a volume imbalance in that 3 candle fair value gap formation, I include it for my anchoring. And look at that reaction right there off of CE, consequent encroachment, or 50% of that busy. So what does that mean to us? Okay, that is an algorithmic signature. Now I want to see if we can push higher. So best case, at least, excuse me, to this high here in the weekly SIBI low. I want to see that low remain untapped. I don't want to see it go back down there. And then on ES, okay, see how we barely tapped into this here, right? Very shortly, right? Signature of strength. Now, ES we could revisit. I don't really want to see us dig down too deep into this if we are going to reach all-time high. So that is my target, at least looking at the weekly chart, right? And I do think it can be done this week, especially with all the red folder. 572125 all-time high on the S&P. Okay. Now, just based on the simple fact that ES is a lot closer in terms of structure to its all-time high, we can target that if or when we get a setup and see the signatures delivering up to that all-time high. But if or when that does occur, I really want to see what is going to occur after that, because we could see some sort of SMT up here in relation to all-time high on the S&P, right? Where ES makes this higher high, and then Nasdaq does something like this, right? Nasdaq would fail to reach its all-time high into this weekly inefficiency. Then we start to roll over, or in other words, we start to see discount inefficiencies fail to support price. So the bodies would be closing below them. So that's just kind of something I want to mention as a potential scenario, right? Could Nasdaq go and play catch up? Of course, right? And we'll just watch to see what structure continues to present itself, right? Just looking at Nasdaq here, if we are going to come up here to go down, I don't want to see, of course, a close above this SIBI, because then I'd want to see it used as an inversion to go play catch up with the six sister approach to the all-time high on Nasdaq at 20,983.75. Okay, but on ES, I want to see us continue higher and take out all-time high. On the daily chart, okay, Nasdaq, so see right here, I copy down the weekly SIBI low, again, going back up, that level, 20,084.75. If I copy that down, see how it's also a daily swing high, right? So I'm starting to stack confluence here, right? A reason for price to get up here on top of the reason it was a weekly inefficiency low. Now, further, what is above that, right? This daily inefficiency too. So I'm looking for multiple reasons for price to want to gravitate up towards here. Liquidity and inefficiency on the weekly and daily chart. Okay. On top of this, and this is kind of just a fun scenario that I think, if that reversal was to take place, where we had the potential SMT in relation to all-time high, ES goes and makes it, Nasdaq fails to, okay, it would be very, very cool to see if this was kind of like a false bull flag on Nasdaq, okay, to trap traders into this weekly and daily SIBI, and then we roll over. Now, is that going to happen? I don't know. I'm not just going to turtle soup this on the daily chart and hold for months, but we'll see. Kind of just something I'm watching, which would be cool to kind of attack that retail logic. But I do want to see us, if we're talking about a bull flag, I do want to see us break out of this to this high. Okay, and we can get more conservative targets as we go to the next time frame, which we will discuss. But where is Nasdaq delivering from as well? Okay, see how we respected this here, this busy. Now, when we are running lower, if we are bullish and completing manipulation to sell side or returning to a discount, we've discussed this in recent calls and recent videos on the YouTube channel as well. While the manipulation phase is taking place, and this is fractal, I use the same logic, the same framework as I do on the 1 minute chart. But if we're bullish and we have multiple, in this case we only have one here, but if we have multiple inefficiencies below the uppermost inefficiency like we do here, okay, I want to see the reversal signatures while we fail to get to this one, because that's showing me that this is a signature of strength and that this is a breakaway gap, right? So the market doesn't care about going down here. It's coming down to a short-term discount to complete manipulation and then reverse back and continue higher to its buy side or premium targets. Okay, so I want to see this remain open until we reach 20,084.75, this target here. Okay. Now, if let's say we just roll over and close below here, I think we could use this as an inversion to go deliver to here. Okay, and we'll have to just stay fluid with price. Okay. S&P, look at the daily SIBI. We talked about this last week and potentially the week before, from the daily candle on July 24th, and note the volume imbalance right there. See, I'm using that as my anchoring, just like the weekly chart that we discussed. We got to close above right here on August 19th. And see how I have it labeled high probability bullish inversion? Someone tell me why I'm classifying it as such in chat. Make sure you guys are paying attention. Why is this a high probability now bullish inversion? Right, Ross? It was used by the algorithm to go lower, right? If we were still bearish, and it's such a simple, logic around these PD arrays, but it's so powerful. If we were still bearish, ICT says what? The bodies tell a story. Would we want to see price come up here so aggressively and then just show no signs of resistance and close right above it? No, right? So this is just another form of change in state of delivery, right? It was used to send us lower here. Now we want to see if it's used to send us higher, because the algorithm, if I'm correct about this assumption, which we have seen thus far, right? The algorithm is now going to refer to these key PD arrays on the left side or sell side of the curve when we were falling, and now we are recovering for the buy side of the curve. Okay, so by extension, what do we mention last week, and what do we mention just in tandem with the relationship between high probability inversions and breakaway gaps, right? We want to see this high probability inversion act as a smokescreen for this BISI, for, of course, by extension of that logic, this BISI, and I missed one there. These discount fair value gaps. Okay, and on top of this, just the logic of the same thing I discussed if this was a 1 minute chart or the daily chart like we're looking at now. This is such aggressive sell side delivery followed by such aggressive buy side delivery. So a lot of shorts, at least at the moment until we see some of this buy side ran, are trapped all the way down here, right? So the algorithm, and the way I'm looking at it, is not going to want to return too much of a discount to give those trapped shorts the opportunity to get out at even or at less of a loss, right? They're going to want to keep them underwater and continue to just stop them out, right? So I want to see, just like Nasdaq did here, and this is what we discussed last week. So at this moment, right, when we closed on August 19th, we closed above this SIBI that we discussed. You want to see these things remain as a breakaway gap if we are going to see continued bullish prices. Right, now could price, let's play devil's advocate. Let's say on this drop we came down to the low of the inversion, right? Could price dip into this and then still recover? It could, right? I don't want to see it reach the low here because then it's probably just going to continue to bleed, right? But internalizing order flow, and even before this, support thus far occurred, you don't want to see it reach down there, and really you don't want to see it reach CE. And if it does, what do you want to see? The bodies respect it. So if I put the middle line here, right, look at what it's doing here. See how it's respecting that? Yes, we wick to it, but the bodies tell the story. Okay, now we're finding support out of this and pushing higher to some engineered buy side liquidity. So ES again, we mentioned on the weekly chart, I want to see if we can drop to 5721.25 all-time high. First target here, which we are pretty close to, is last week's high at 56.69 even. I think we'll get that. Okay, it would be real nice if they, gapped us down or had a small open and then dropped us for the Monday, probably slow session, and then gave us opportunity to target this. But we'll see what happens with that. But again, just to make sure I'm clear, I don't want to see these breakaway gaps get delivered to until we meet these buy side liquidity pools. Same thing with Nasdaq here. I want to see us at least reach this here, looking at the daily chart, 20,084.75. The daily swing high from, what's that date? July 23rd, which is also, again, the weekly SIBI or bearish fair value gap low. Okay, so let's see. 4-hour chart, let's finish this up. And now we can see how much pent up buy side liquidity there is on Nasdaq. Look at all of this and look at our first more conservative target, which they brought it up, once, twice, 3 times, 4 times, and left it. So this is, I have it labeled as engineered buy side liquidity. That's how I'm looking at it. The algorithm's going to want to go there, right? Shorts think that that's strong resistance. Retail, classically taught retail traders, I like to use that terminology because we're all retail traders, but classically taught, traditional concepts, they're taught to put their short stop loss there. Okay, so this is where I want to see price go. It is the high from last Tuesday. A little note on this as well. I'm sure you guys were targeting this at some point during the week, whether it was on this move up here and then you got stopped out, or on this move up here, then you got stopped out, right? Or since we had such clear highs, you were maybe a little hesitant to short. That is fine, right? And this is why it's important to be okay if you try to take a stab at a long here on your long setup and you take a loss, right? As long as you have your max trade rule, okay, you're not going to go on tilt. Okay, it's impossible if you respect that max trade rule and you're not over leveraged, of course, and you have proper risk management. But also a thing to think about when like I was in a long here, okay, and I wanted us to go up here. It didn't get it, right? I got stopped at even, right? Is it annoying? Yes, of course it is. I would have loved to see it go the extra however many points to go up there, okay? But I know at some point I'm going to get another opportunity to target that, and that the algorithm is just engineering more liquidity and trapping more shorts right now, right? Convincing more traders that this is resistance. So even though, yes, it can be annoying on a stop loss or a break even when it gets so close to your target and reverses, at some point we're going to get back up here. So I'd like to remind myself of that when I see this type of delivery. Yes, it's annoying, but I know at some point I'm going to get a setup to target this liquidity. So the first and major target for the week is last Tuesday's high, the 27th. That level is 19694.25. I want to see price go up there. And then above, again, we already mentioned at the very high here where my cursor is, the daily buy side and the weekly SIBI low, 20,084.75. I want to see if we can get up there, but these are my initial targets, and really I should have this on my chart as well. This should be especially if you guys or myself are in a trade here, this can be a place where we really want to monitor. If we're bullish, we don't want to start to see us slow down here, because arguing the opposing bias of a reversal back lower, and the argument that previous week high, this daily high I've labeled the 20,084.75 weekly SIBI low, is not going to get delivered to. Utilizing this engineer buy side liquidity, we can target that, but then also like two things could be occurring at once here. This could be stopping, if we get above it, stopping out shorts who think this is resistance, and a lot of traders are also saying this is a breakout trade if they get above it, right? So what I don't want to see, if we're going to continue higher to these labeled buy side liquidity pools, I don't want to see us come up into here and see some sort of SMT with ES here, and or just we wick to it, maybe fail to reach the high, so it classifies as a breakaway, and then we start to see discount or bullish PD arrays, fair value gaps fail to support price, because then we could reverse lower, and most likely that would be occurring above Sunday opening price, which would categorize for a potential short setup. So if or when we do deliver above these highs, the engineer buy side liquidity at 19,694.25, and reach up for this higher 4-hour SIBI here, this can be a place where if I have multiple contracts, I can take a partial, right? You can take your whole position off and be satisfied with enough. But I really want to see if we can get close above here, because that will give me further conviction that we're going to reach this next target, previous week high, daily high, and then we'll see what structure presents itself. But continue higher is the premise there. Okay. So ES really not much more. I mean, you can see how clean these highs are as well. Nasdaq 694 is just super, super clean. So I really want to see us go there. And then if or when we deliver to this SIBI on the 4-hour chart, that can be a target, but see if we can get above that, right? And if we start to see reversal signatures back down here, I need to make sure, if I'm in a trade here, make sure I'm managing risk, right? Staying objective, right? What do I want to see? I want to see us get above that. That's what I want to see. But if the market doesn't show me those signatures, I'm not just going to force my bias and continue to try to, buy above this. Okay, but the premise here is that we have a lot of red folder this week, which is a lot of opportunity. Okay, you just have to stay patient and not gamble that red folder news. Okay, wait for the dust to settle after those events and wait for clear setups after clear manipulation has occurred. The basic premise of, if you're trying to trade, especially in the 1 minute chart after news, again, it needs to fit narrative and you need to have your whole picture painted. But if you identify your drawn liquidity, best case for red folder news, and the easiest way that I put it, is that you want to see that red folder. So if we're looking at Tuesday, 10 a.m., right? If we're bullish, you want to see that 10 a.m. red folder get used to run sell side liquidity. So that is the manipulation initially. And then if we have a news fair value gap, so a SIBI, a news SIBI, you want to see after that manipulation occurs, get back above that news fair value gap, use it as an inversion to go attack your drawn liquidity. Of course, there's more that goes into that. We can see what time we do those things. Is it during a macro? Do we have an SMT? Everything that we discuss in terms of hunting a trade and internalizing order flow in relation to those economic calendar. But we have, fireworks this week on the economic calendar, and we have a lot of buy side liquidity here. Now, one thing that I am not sure of, right, or not confident in, right, I'm fairly confident that we're at least going to get 69425. That's where I think we're going to go, right? What I am less confident about is where the downside manipulation is going to take place. So I really want to, hopefully see a prominent new week opening gap this week that I can utilize for my trading. We do have this SMT here, and let me just make sure I'm correct about that. 2 p.m. Yeah. So we do have this SMT here in relation to last Thursday's low. You see S&P here, and I always forget looking at, if you guys are watching through Discord stream, it's probably a little smaller than on my screen, so I'll make this a little more prominent, just so everyone is clear and everyone is following along. Okay, we do have that SMT, so it would be nice to see last Friday's low here, right, hold, or in other words, not get delivered to, okay, and not much manipulation below Sunday opening price, because this is a bullish signature here, right? Same thing here in relation to last Friday's low. You want to see this bullish signature remain true, and this here as well, of course, remain as a breakaway gap right here. So we're just identifying clear bullish engineered buy side liquidity pools, and we're identifying as well, when the manipulation is and or was taking place, what bullish signatures do we see? We see an SMT down here, and we see this gap fail to get delivered to. Okay, you guys see how this is, people ask me how to build a narrative, and it's just these signatures and painting the picture and putting the pieces together. Okay, right, what is the market telling you? And going back up, remember, this was failed to deliver to. These were failed to deliver to because of the high probability bullish inversion, which we see virtually every day in some degree on the 1 minute chart, but on the 1 hour chart, 4 hour chart, etc. Does it fail sometimes? Yes, of course, just like everything else. But when it fits your narrative, you really want to see signatures like this, right? Look how it came to CE. We had a liquidity sweep in here, and now we're expanding higher. Okay. But now I'm not sure where this manipulation could take place. Something you can, and something that I will do, if they do start to drop it, whatever high is made here, I will just be running my dealing range, discount and premium, like such. Okay, utilizing the low from last Friday, because that's where we had the algorithmic signature of the swing low form. Okay, and same for ES. And I will just be keeping an eye in terms of my key reference point also on this dealing range too. So this is important, right? Or if, let's say they make another little higher high and then reverse it, I'll just adjust my dealing range high. But the dealing range low from last Friday's low is going to remain the same for me. And then also, if this is the engineered buy side liquidity, let's get this exact level, 19,694.25. Let me adjust this. Okay, Okay, this is your implied dealing range. So you can refine the equilibrium level a bit. So like if here the market comes down to, you can see the equilibrium level of 19,53250. That's the implied dealing range equilibrium. So if we come down to here, I'll still be watching to see if we get reversal signatures back up here, right? That's how I'm utilizing this, right? I'm not putting a buy limit here, right? Just looking at the 4-hour chart and then just hoping it goes up. I'm going to look for models off of these types of key levels, right? But I'm also aware of, so if you want to write down a piece of paper, right? 19,53250. That's a level you want to watch, right? If we come down first before taking out the buy side liquidity, it's a different story if we just rip up there and take it, okay? But also, I will be looking at the dealing range utilizing, like I've mentioned, Friday's low at 19,370.5 and whatever highs form. So now it is Friday's high, right? As you can see, it's 19,63275 and the equilibrium is 19,50175. So see how this dealing range is, lower than this one here, right? So if we're truly strong, we can do something like just bounce off the implied dealing range real quick and fail to get to the actual dealing range equilibrium. Okay, but besides that, I want to wait for more structure on the hourly, 15-minute, 5 and 1 minute, the lower time frames, to see if we can see some more clear manipulation. So, a London session low get taken or an Asian low get taken as we progress, especially on Tuesday. I'm not going to be trading on Monday, but especially to start the week. Okay, so we'll see what we get. We have clear liquidity pools, right? We've identified signatures on each time frame on both markets. We have an action-packed week in the markets. If you join late, I did record this, and for everyone else, I'll put it in the weekly outlook channel. Okay, I hope you guys enjoyed this, and as always, I hope you guys, feel free to share your thoughts as well on the market, what you guys think price is going to do, where you think it's going to go, what your bias is for the week or for the first trading session of this week. So I don't know, always just, it's fun to talk about markets. And again, I could be wrong about this stuff, right? But the main thing with your bias weekly or coming into a day or, a London session, a kill zone, a macro, the main thing is that you are patient, you are disciplined, you are managing your risk, and the setup, when it finally comes, makes sense to you, and then you put it on and trust it, okay? You trust it and you're detached from the outcome. Of course, we all want to have winning trades. No one wants a losing trade. I don't want a losing trade. I want 110% win rate, right? But that's not plausible, okay? So we have to just focus on following our process, our system, our model, the way we internalize price, and know that if and when we do take a losing trade, we're not going to go on tilt and we're not going to freak out, and it's not going to break us as traders or as humans mentally. Okay, so of course these technicals are extremely important and extremely interesting and fun to talk about what the market's going to do. But at the end of the day, like, you can be a great analyzer, right? But you still have to manage yourself and execute on the trades when the opportunities present themselves. Okay, so still this week, do your due diligence, not only with what we discussed here, but go through your charts, do your top-down analysis, focus on the economic calendar, but really write down good habits that you guys want to instill this week, and probably more importantly, what bad habits do you want to get rid of, right? What bad habits were finding themselves back into your trading last week, right? Did you overtrade on specific days? Did you over leverage? Even if it was a win, right? Be objective. You want to start to get rid of those things, because that's how you genuinely improve as a trader, right? I could over leverage this entire month and have a green month, and yes, it would look pretty on my account, but at some point those bad habits are going to come back to bite me, right? It's hard to sustain those bad habits, over trading, over leveraging, gambling, impulsive trading, all those things. So just be honest with yourself about your goals this week and about things you have to clean up from last week, and just take it day by day. Every day is a new opportunity to find trades, to improve on yourself, to implement those good habits and get rid of bad habits. Okay, so I hope you guys have a good trading week. Enjoy the weekend, right? Do those things that we just discussed, but get some time away from this charts. It's so easy to get consumed by this stuff and just only want to look at charts all days. That's kind of how I am. Whether it's reviewing trades, actual trading, you have the itch, right? Just getting ready for a week. We all want to improve, but make sure you guys are getting off the charts and taking a break and resting and recovering for the week ahead. Okay, so I will talk with everyone soon and have a good weekend.